Bonds want to go up. Stocks do not want to go down. That's the problem in this sequence. Biotech's sold off a little bit. Oil has not really rallied, but the stocks do not want to go down. They're stubborn. You got new highs, albeit only by one tick in the bonds, and S&Ps do not want to give up Friday's close. Too many shorts. That's what I didn't want to be stuck short for. That pop. You could just see they should have went, didn't go. Bonds come off 11 offer, 10 offer. Now they're 9 offer. Large offers, that's good, Brian. I didn't notice it. 900 offered at 14, but this was a situation where there were sell stops below 54 quarter, buy stops above the top of this range. Bonds couldn't get the stocks to go down. As soon as they got above 55 half, gone. Like Nyquist. What was the horse that won the Derby Saturday?
Yeah, Nyquist.
That's how you pronounce it?
I think so.
You know what's funny is I'll tell the story in a second. Here's where the stop started. This is a moment of truth. Bulls need to hold this as some support. Bears would like to jam us right back into this consolidation we just came out of. Moment of truth. This is support. 55.75. Again, if I had a trader I backed, bought it off that support because he thought the bond softened up, wouldn't care if he was wrong. And he was right. This thin spot, and then you come to the room, you get familiar with near-term support resistance. This is a thin spot. Market rallies, come kind of back where the stop started, and then re-rallies. Julia, you want to cut that one? I needed a couple more for thin spots. This is a good one. It could be a stuck long here at 58. You need them to stay at or above 58 even. Big buyer came in. Stocks have been stubborn, did not want to go down, and didn't. If they cross back through 58, they could drift back down to like 56.75. Nice line in the sand here at 58 quarter. Bulls are flexing their muscles, though. Be careful. Oil is finally, here's the thing. Let me show you guys something in crude. When it's in this sequence where it can't go up when it should, it means there's too many longs, and they have to get washed out. That doesn't mean, okay, wash out, then it'll run. It just means when you understand context better, like when you're right here at this price, it's so much different than when you're right here. Could be the same price. The difference is they didn't have the washout when they're right there. When you get on the other side, they had a washout. So there's less longs in the market this time. So if the stocks re-rally, they just have a better chance of going up with it. That is a great lesson where they didn't do what they should do there, but then they have the washout of longs, so they have a easier path back up. As soon as they cross back through this 200 lot, what did they do? The longs started taking profit. Maybe, Julia, we just snip it right on the other side. So thin spot, big lot. Snip it on the other side of that center sequence.